Chairman, I'd like to make a statement in regards as a county commissioner from District 1. In regards to the letter from Wyoming Secretary of State Chuck Gray. From my constituents and from my District 1, this is outrageous. This is not what District 1 would want. And my constituents, along with the Eastern Shawnee tribe and Northern Apple tribe, are against this. And in that any movement toward this, I would need to, at this point, say nay to Mr. Secretary of State Chuck Gray on this movement of this letter. And in that, it is not what Fremont County needs, nor does he understand Fremont County. And that's my statement. Thank you.
Thank you. Thank you. Sure, Jim and Tuesday. Revenue projections and assessed value projections.
Can I go first? I'd be glad to start. Mr. Chairman, Commissioners, what you have before you is the estimated valuation for 2026. I gave you a projected one in April, but again, at that time, we were still talking about, Mr. Chairman, do you all have copies? This is what I'm looking at.
Yes.
Yes. Okay. But again, at that time, Jim and I were still working through some figures of the oil and gas production, trying to match what we've actually received with what the estimate that the state sent me. Because as we know, that seems to fluctuate at times, and we base our valuation on something, and then that's not what we get certified. So as we look down through this, if you look at the 2026 column, the red numbers, that is what we're currently working through in our appeal period. Our appeal period ends a week from this Friday. Doing well so far. The only big issues we've had are with the folks that forgot to sign up for the 25%. You've probably gotten phone calls on that. So it very well could be that somebody gets an assessment notice, their value went down, but their taxes went up because they didn't sign up for the 25%. Even though they were notified about 4 different places. I won't spend a lot of time on that, but that seems to be where the basis of those complaints are coming from. So we're still working through that. That number will change depending on what appeals we have. So what you're looking at is a total county valuation. That's what I'm in control of, $533,882,752. That is up from last year's $470 million. The second page we'll go through in a minute, and I'll tell you why the most significant part of that increase, because as you see, most of those categories, I've calculated the difference for you. Most of those categories have stayed the same or gone down, except for the 2 residential. That is solely based on the 25% exemption. And I'll present some numbers to you in a minute so you understand that. As we look at the 2 blue numbers, the numbers in blue, those are the state assessed numbers that, as you know, don't get certified to me until June. So we're using estimated numbers. The state sends me estimated oil and gas projections, and that's what Jim and I look through and then balance with what he's actually received. That was significantly up. The minerals were from my.
Amen. Thank you.
That was significantly up from what I gave you in April. And as they balance their year end, that typically is what happens. That's why I don't try to overshoot that number in the beginning. So what we're looking at for a total county valuation is $733,186,334. That is up from the $696 million last year. It's about a 5% increase. On a 12 mil calculation, it's about $443,000 in actual tax dollars on 12 mils. So that's what we're looking at for a county valuation. Again, that local one is subject to change. Well, they're all subject to change as we progress through the appeal period. The next page is I've given you a summary of the exemptions. If you go to the bottom portion where it says 2025, I've got them broken out. The 4%, which is on your assessment notice, is called the residential. That means property values cannot go up more than 4%. That's the one that is in question at the state right now that we talked about the other day. About could affect our certified values. I have gotten word, and thank you to the County Attorneys Association, jumped right on it and got some answers. I'm not sure where that's going to go. There'll be a lawsuit on that. I'm sure there'll be a lawsuit to decide whether that's constitutional or not. But right now we're going with it. So the loss in 2025 attributed to that was 31,791,470. I took an average mill levy in Fremont County so that we could include all of the districts, the fire districts, and that was 76 mills. So we exempted approximately $2.4 million in tax dollars for just that exemption. That's a permanent exemption. It'll happen year after year. This is our third year of applying that, unless the Supreme Court should find different. The long-term homeowners last year was also 31,839,12, and that was also about 2.4 million in actual tax dollars that we exempted. We take applications for that through the fourth Monday in May of every year. They did remove the sunset from that this year at the legislature, so that will be a permanent as well. The 25% exemption, the homeowners, as you remember, when the legislature passed that bill in 2025, excuse me, they made it mandatory that we give a 25% exemption on every residential home and residential land under that home. That was a blanket exemption. We exempted 70 million in assessed value for a total tax dollar amount of 5.3 million. So altogether last year, we exempted about $10 million in property tax for Fremont County, all of the districts, schools, the county, special districts. Now, if you look up at 2026, you're going to start to see where the changes came that affect the increase in those residential numbers on the previous page. The 4% cap, again, Fremont County is still increasing. We're seeing sales that are just, we're still moving. I think Park County's moving, Teton County, Sheridan County, those counties are still seeing an increase. Some have leveled off. So they wouldn't have as much 4% cap. But again, we exempted this year so far, and we're not done. So these numbers will change as well. 31 million in assessed value, which is pretty close to last year's. 2.3 million in tax dollars. Long-term homeowners. So what we've done is we've shifted some from that 25% category to the long-term homeowners. It's 50%. They qualify this year. We've probably had about 300 new applications. Last year we exempted 31 million. This year we're at 34 million. So that tax dollar amount is 2.6 million. This one's the telling one where your increases come from. The 25% exemption, the homeowner's exemption. Last year, we exempted 70 million in assessed value. This year, we exempted 15 million. And the confusion's coming there on the application date, but they were notified on last year's assessment notice, a tax insert. We put in the tax bills, telling them where they could go to apply, how they applied. They applied through the Department of Revenue. The original date was February 1st. They extended it to March 1st. Just a lot of people didn't. So I expect an increase in that exemption next year because it is a permanent exemption. But last year we exempted 5.3 million. This year we exempted 1.1 million.
One question.
Yes.
So we've got it on the initiative on the ballot in November, correct? For half exemption, half the property. So when would that go into effect and how would that affect the 25%?
Mr. Chairman, that will go into effect in 2027, and I'm still working through all the logistics. In one of the bills they wrote last year, the long-term homeowners, when they took the sunset off, they wrote in there that should the initiative pass, the long-term homeowners goes away.
Okay.
I need to go back and check We're still working through what that means for the 25%.
Uh-huh.
It does say in there, you cannot get you cannot get two exemptions in this paragraph. There's also a paragraph that directs us which order to apply these exemptions. That they had to write one of those, so we knew, so if somebody wasn't doing the 50% first and then the 25, and so that's all gonna come together. I will keep you updated as we go through that. What I will tell you is right now, the ballot language, I'm still sorting through because the ballot language does not 100% match what they got signatures for. I don't believe. But what's on the initiative is 50% of the structure only, and you have to have lived in Wyoming for 1 year. So that's gonna disqualify some people that are currently getting it, and it's gonna take away their discount on their land. So I don't know at this point, I haven't calculated enough of the 25% exemptions to know if getting a 50% off their building is better for them than 25% off their land and building. So it's all right now up in the air, and we really need as assessors to sort through the language on that ballot, what it really means, because it's not exactly what I have in my book that they had people sign.
So people who own, that has stipulations, they have to live on the property or they exempt all their properties, people own more than one property.
It has to be their primary residence, and they have to be a resident for 1 year before they can get the exemption.
Okay.
So I'm going to be taking approximately 20,000 applications.
Yeah. And then fix and deciding what's what.
Yes,
For Chair, for long term, it's better that we take the long term. If you've been there for any time, you're still living in your home, did you take your home and the land?
Mr. Chairman, that's correct. But the statute says if this initiative passes, the long-term homeowners goes away. So we won't have that choice. Now, I'm also,
That'll benefit the new people.
Mr. Chairman, I'm also checking to see how it's gonna work as far as, I just lost my train of thought. I've got so many thoughts running through my head about these exemptions, but I'll get back to you on that.
I know there's a lot to it.
There is a lot.
Yeah. Yeah, it's just all right now, it's kind of up in the air, and we're trying to sort through how we're gonna do it and what we're gonna do, and oh, I know what I was gonna say. We're trying to sort through right now with some legislators that I believe if what is currently in the statute is better than what the initiative is, I believe the Attorney General can say no, but I've heard that, talked to the Department of Revenue. I believe the legislature can also make the initiative better, so they maybe could add the land. These are all the things we're working through right now as assessors to try and help people decide what their best avenue is in voting for or against that initiative. 50% sounds good, but we've already got some pretty darn good exemptions. So
Devil's in the details.
devil's in the details, and they don't necessarily come out until you start applying them and go, oh, I didn't think about that.
Right.
So, personally, I think Jim's office should handle it, and people could just bring it out to the. I tried to do that at the legislature this year. I said, just give them a voucher. We can figure this all out when the tax bills go out. They didn't go for it. Don't worry, I'm not done. No. And this year, then what you're gonna see is a line called personal property. So they passed last year, that was implemented this year. Every personal property account we tax for business equipment and farm and ranch equipment and oil and gas equipment. Every owner, so you could own 6 corporations, every corporation gets a $75,000 market exemption. So staff had to go through and apply those. So you have multiple, you have an owner that has multiple tax districts, Farmer Brothers, the coffee machines, all of those, we had to go through and apportion those exemptions on those accounts. $75,000. So that totaled about 5.1 million in assessed and 393,000 in tax dollars. So That's basically what your assessed value is comprised of, and the things that will affect it, maybe change it as we move forward, even this year and then next year.
Chairman, now for the fun stuff. All right, so I have given you actually three different things, so I'll let you sort of decide how you want to take a look at it. I'm not going to read the memo to you, but I will read part of it.
This is measuring the thickness. Yeah.
Yeah, it's 7 pages worth of memo, for
And now,
legal size pages worth of revenue
Discriminate.
projections.
Yes. I always thought memos were short.
yeah, not a novel,
Yes. Just saying.
just so you have to.
Oh, yeah, it's a novella. All right, I am gonna read this next paragraph here just as an intro and so you understand what this is. These projections and estimates are based off of best available information and are distilled from past performance, communication with county elected officials and department heads, estimated monthly mineral tax payments received via the Wyoming Department of Revenue, the January 2026 Wyoming State Governor Revenue Forecast, also known as the Craig Report, the WCCA Revenue Estimating Manual, mineral production information from the Wyoming Oil and Gas Commission, the Wyoming Department of Revenue Annual Report, and projections from the Wyoming Department of Transportation. These projections may be updated at a later date if significantly different information is obtained. So there's a lot of sources that I pull information from, and hopefully it gives us some pretty good numbers. So when you look at the projections, which is the big page here, you'll see that we actually project out into future years. Those are just there for informational purposes. I would not stake any bets on any of that stuff, so take it for what it's worth and don't use it for anything important. All right, so what I'm focusing on is our general fund revenues. So that's broken up into several major categories. So we have taxes, which include property taxes and motor vehicle registration. Licenses and permits, these include liquor licenses, septic permits, access permits, that sort of thing. Federal intergovernmental, so this is money that ultimately generates at the federal government. Most of it is passed through the state to us. We don't receive most of it directly from the federal government. And we have state and local intergovernmental. So these are the funds that come from either the state or local municipalities that come into as revenue. We have charges for services. So these are the various fees that are collected in the different departments for goods and services. Many of the fees are dictated by state statutes. Some of them are set at the discretion of the county. Investment income. This is interest earned from the investment of the available general fund cash as part of our combined investment pool. Other revenue, these are just kind of typically small revenues that just don't fit any of the other categories very well. And other financing services, these probably should say sources. Other financing sources, these include interfund transfers and like proceeds from loans and sales of assets. So they're not like a true revenue from that standpoint. So we'll kind of get into these in a little bit more detail. Start off with taxes, motor vehicle registrations. If you look at the sheet here, we had anticipated $880,000 in motor vehicle fees. Currently, I'm projecting $1,126,000 in fees. And I'm estimating for next year $1,040,000 in fees. These are a little bit tricky to estimate because especially when we're looking to next year, I use a kind of a generic 9 mils for the county's portion of our 12 mil levy. That could obviously go up and down, which will have an impact on our motor vehicle fees somewhat. On top of that, it's also difficult. People buy new vehicles, sell their old vehicles, keep their old vehicles, move to different parts of the county. You know, and so all of the mill levy stuff fits into it. So it's a tricky number to nail down and so there it is. Property taxes current. So we talked about our assessed value. So property taxes are based off of assessed value. This year, we actually split our property taxes into two lines. We have the property taxes current, and then we also have property taxes minerals. And I've been thinking about doing this for a couple years now, and finally took the leap as we headed into this year. And so when we talk about property taxes current, if you refer back to the information that Tara presented, those property taxes include everything that her office assesses. So they're the red numbers on her sheet here. And it also includes what's just known as the state assessed number, which is the $26 million in blue. So from that standpoint, we are looking at a total of for regular property, current property taxes, an assessed value of $559,883,000. Again, based off of the 9 mil best guess at this point, that'll generate $5,039,000 for the general fund for property taxes in the upcoming year. This amount could increase if our mill levy is greater than 9 mils. Could decrease if it's less than 9 mils. To give you some historical fact, actually, if you move on to page 3, there's a little bit of information on historical things. Our mill levy just for the general fund has ranged anywhere from about 7.6 up to 10.1. So there is some variability here that does affect these numbers. And that is what we'll go through as we go through the budget process, try to nail down these numbers a little bit better. Questions on property taxes for real estate, et cetera?
Question.
Would that include industrial? Yeah. Yes.
Yes, it does.
So what you were saying, Terry, earlier is that these companies can come in there and call this one company and another company, and they get all three of them get the same deduction. How does that work on a gas plant where you have like 1, 2, and 3, 4 all owned by, one's owned by, let's say Marathon, this one Conoco, Exxon, whatever. How does that?
Mr. Chairman, they all get the exemption.
They
Each
all get-
each name would get, because they're gonna report what they own. So Marathon's gonna report what they own, Contango's gonna report what they own, even if it's all at Contango. When they do the take in kind and the who owns this portion and who owns that portion, they each get whatever they're reporting gets an exemption of 75,000 market.
That doesn't seem fair.
We mentioned that.
Good luck, right?
Right, state assessed minerals, I've talked about this since 2022, and I generally get glazed looks when I get too far into it, so I'm gonna try to just hit it at the high levels. If and when you read through this, and assuming you can stay awake through it, you'll see some language in there that talks about tax years, fiscal years, production years, that sort of thing. So they're all interrelated to each other. So when we talk about a tax year, which you'll hear a lot from the assessor's office, we're talking about the year that the taxes are assessed. They're based off of the calendar year, the prior calendar year. So that's mineral production, ownership, all of that stuff is based off of calendar year prior to the tax year. The tax year is then related to the next fiscal year. So we are moving into tax year 2026. It's based off of ownership and production of calendar year 2025, and it's called fiscal year 2027 because that's when our fiscal year ends. Make sense?
Yeah.
Okay. The reason why I bring this up
It's okay.
is because as we do the monthly mineral taxes, so we are now receiving taxes as close to real time as we possibly can. So there's about a delay of 3 to 4 months from the time any particular mineral is mined or produced or, whatever, to the time that we receive the taxes on that money. It used to be almost an 18-month lag before we would see any tax money on that. So the problem that creates, however, is that the mill levy that's associated with fiscal year or calendar year 2025 production won't be set until August of 2026. So all throughout 2025, they've got to use an estimated mill levy, which actually relates to tax year 2024, because that was the last approved mill levy. So we are forever receiving taxes off of a mill levy that's not real anymore. But we don't have any better information. So all of these estimated taxes we accumulate, we distribute just like regular taxes based off of that prior year's mill levy. And then in September, once our mill levies are set and we get the tax rolls and everything's been certified, we go through a process called the true up, where we take all of these estimated bills and all of the estimated payments, undo everything, blow away the estimated bills, put in the true bill, and apply the payments that we have already received to these new bills. So in a perfect world, mill levies don't change, production is exactly the way it was, and it becomes a total wash, not a big deal. In the real world, however, production values go up and down, mill levies move around. Could be that we end up with a large chunk of money that we either have to refund back to the mineral producers if the overall mill levies are now lower than they were before. It could be that the mineral companies owe us money because the mill levies are now higher than what they originally paid. Most of what happens is that there's just a reshuffling of the money among all of the tax entities. So if Fremont County's mill levy goes down, but a cemetery district's mill levy goes up, then we in September give them some money. And so now they're made whole, and then we figure out what goes on with the mineral companies. Ideally by December, everything is caught up, we're clean. So now that tax year is over and done with. But in the meantime, we're also collecting now on the current taxes moving forward. So again, state assessed minerals is a very tricky thing to do. The third element to the minerals, of course, is when we made that switch to the monthly minerals in 22, there was essentially they had to leapfrog over 1.5 tax years for the mineral companies. And certainly they could have said, too bad, you got to pay 2 years worth of taxes for the next year and a half. Or what they really chose to do is say, you know what, you get to defer those taxes and you'll get to pay them back over a 13-year schedule. So in addition to the true up, in addition to the monthly minerals, we also have a payment of deferred taxes that will happen through fiscal year 2035, I believe.
What happens if they fold?
So that's a fine question.
We asked that too.
Yes. And I don't know. I mean, I suppose that happens. It can happen. And that was the reason why they went to the monthly minerals to begin with, is not so much at Fremont County, but in other counties, literally millions of dollars were lost because somebody went bankrupt before their tax bill was even calculated. And, it's just lost revenue at that point. So the idea is, we're trying to stay ahead of that by doing the monthly mineral thing. So, bankruptcies, yes, it could happen. We were very fortunate in Fremont County that we had, probably the biggest fortunate thing was that about the same time this happened, Contango bought the gas plant from Burlington. Yeah. And so, because of that, Burlington just said, you know what, we're just going to pay all of our taxes and be done with it. So they paid all of their regular taxes on schedule. We had a large influx of money then, kind of right away. to the tune of about $12 million worth of taxes that came in. That's not all of the county's money, but it was distributed out. So we anticipate now about $72,000. We did have a number of companies that just didn't want to deal with the 13-month or 13-year thing, and they just said, you know what, let's just pay it. We got money, let's pay it. And so that's been good. The ones that we have now are probably the ones that are just, they're gonna milk it for the 13 years. You know, they're gonna just pay what they have to pay. So if you flip over to page 4, I kind of break this out. So you can see the real estate property taxes I mentioned before, $5,039,000 in revenue from real estate, personal property, and state assessed. And then for the minerals, we've got the anticipated true up. So the true up based off of the mill levies, and again, that nine mill assumption that we have, the general fund should get an additional $187,000 in mineral money because of the true up. Estimated monthly taxes. So we're kind of looking ahead, and this is where I dive into the information that's available in the Craig report and a little bit for the Wyoming Oil and Gas Commission. Is we're making an estimate on what we think the mineral assessed value is going to be for next year. And so with that, I'm anticipating $1,670,000 in taxes from the monthly minerals, which is related to next tax year 27. And then an additional $72,000 from the deferred taxes that relate back to tax years 21 and 22. Grand total property taxes, current and mineral taxes, $6,968,000.
That's clear to me.
It's getting easier to explain. Or I'm just have it memorized now. I don't know. So any questions on that? I guess I will say before, shouldn't have offered to answer questions yet. We do have a few sources. Obviously, not everybody pays their taxes on time. So we do have in our estimates taxes that will get paid on a delinquent basis. So these are from prior tax years. We keep up to the last 10 years worth of taxes on the books. Of course, real estate taxes will go to tax sales. So, you know, we'll see an influx of delinquent real estate stuff in August. There's also delinquent interest and then we always have an allowance, of course, of taxes that probably will never ever be paid. So we make an estimate on that. But in general, we are about 99.9% of our taxes are paid by the time the 10 years have elapsed. So we have a pretty good collection rate there. So questions on property taxes?
Do we still, Mr. Chairman, do we still have pickets do the evaluations for us?
Mr.
That we
Chairman,
have.
yes, T.Y. Pickett does all the industrial evaluations.
Okay. Now it's $45,000 too.
Mr. Chairman, that's correct.
Just to evaluate it.
To pay that, yes.
Yeah.
All right.
Okay.
Nothing else? Let's move on to federal intergovernmental. I just highlight a couple of these here because they're interesting. I highlighted them last year for not great reasons, and so it's better news for this year. We'll start off with emergency management. Last year, emergency management funds from FEMA were essentially frozen by the federal government. So we have typically gotten anywhere from $50,000 to $80,000 in reimbursement for our emergency management department. For this current year, I don't anticipate getting any. However, Mylan did inform me that there is a new agreement available that grant money has been reauthorized moving forward. So we should have $60,000 in the EMPG grant money for department expenses. Mylan also let me know that there was another grant that we have been awarded or are trying for. It's the
25 is the one that we should be getting in the mail any day. And then 26.
okay, we both got that this year. Oh, okay.
Yeah.
I misunderstood. All right, good enough.
26 is this,
They haven't put out the applications
I
for
see.
26 yet.
All right, so better news. The next one I want to hit is, federal PILT, payment in lieu of tax. I bring this one up because it's a pretty big number. This is based off of, land that is owned by the federal government within the county. That is under the Department of the Interior as the Forest Service, BLM land or Bureau of Reclamation land. Does not include the reservation that's in tribal trust. So in Fremont County, that is just a little bit over 3.18 million acres of federal land. Basically we get a little more than $1 an acre worth of PILT money for this. So in the current year, we always receive this at the very tail end of the year. So it's all kind of guesses, but it's been authorized by Congress. So the actual dollar is yet to be determined, but we're anticipating $3,170,000 in the current year. Anticipating that to go up a little bit to $3,263,000 in next fiscal year. Then the other one I wanted to bring up under federal stuff is our secure rural schools and the Forest Reserve stuff. If you remember last year, the federal government the legislature had let that lapse. And so we were kind of under the assumption that we would never ever see secure rural schools money ever again. And as luck would have it, in December of 2025, Congress did reauthorize that, and they actually made it retroactive to the year that was skipped. So in the current year, we have now received 2 years worth of SRS payments. SRS has three different, what they call titles. Title I money actually benefits the general fund because it is money that is shared between the county and the school districts. And from the county's perspective, it's used for road maintenance and snow removal for the transportation department. And so we see that it comes into a fund outside of the general fund, and then we transfer the Title I money into the general fund. So in the current year, which, like I say, is for 2 years worth of Title I money, we are receiving, the page too soon. We've received $1,139,000 in Title I that's come into the general fund for the transportation department. Looking ahead to next year, we'll be back on schedule. Again, this has only been authorized for a few years, so there's always the opportunity for them to let it lapse again. But for next year, we should be safe, and we are anticipating $573,000 in Title I money that will come into the transportation department. I talk a little bit about Title III. I'm not going to belabor that here because we'll talk about that when we do the budget for the Forest Reserve. So something to look forward to.
yeah, I can't wait.
I know. The next category then is state and local intergovernmental. So we get a fair amount of money from the state through various avenues, and I hit some of the big ones here. Probably our largest one is the share of the state sales tax, which is the 4% of the total tax that we pay that belongs to the state. The state has their distribution formulas for all of that. We anticipated a budget this year of $5,700,000 in sales tax. We've been doing quite well, and our estimated projection through the end of this year is actually $5,966,000. Looking ahead to next year, however, with information from the Department of Revenue and the Craig report, and I think we can kind of guess this just based off of how expensive everything is. Sales tax is going to stay about level, so I'm only budgeting another $5,700,000. Hopefully we'll be at our estimates again next year, but I'm just trying to be conservative. I'd rather
So doesn't our, estimated sales tax on the 4% isn't the large bulk of that money? Automobiles, trailers, isn't that your bigger tickets, the bigger ticket items?
Well, it's a little bit of everything. I mean, every single purchase that anybody makes,
Well, right,
you know, I mean, I know for what we collect here, yeah, I mean, we pay a good chunk of sales tax that we collect across the hall there to the Department of Revenue and motor vehicle sales tax. You know, several $100,000 a month we pay to the Department of Revenue. You know, then that turns around and comes back to us and the other municipalities and within the county. The other big thing that I think is as far as an individual payer of tax is online sales. So, you know, the companies like Amazon and eBay and things like that are paying sales tax now, and that is also coming in, and that's a large chunk. I don't have any good information, and I haven't located any good information off of the Department of Revenue site to really kind of get a distribution of the sources of that.
That just went in 2 years ago, didn't it? Didn't that just start that too? Was it in 2?
No, it's been longer than that for
Has
the online stuff. Yeah, it was actually kind of coincided with COVID because we were anticipating things to really tank, especially from a sales tax perspective because of COVID and all of that stuff. And then as luck would have it, people stayed at home and used their computers and bought all the stuff they were going to buy at the store. And then Amazon was paying sales tax. And so we actually, it was a good, fortunate
thing.
coordination of events, I guess, for lack of a better word.
Jim, what is 1 penny worth? When we do a sales tax, we get taxed 4 pennies at the store. So for every dollar we spend, they're gonna take 4 pennies to Cheyenne, right?
Yes, yeah.
Is 1 penny worth $7 million? Is 1 penny worth $8 million? How much are they worth?
So if you're looking at just for Fremont County,
Yeah.
probably the best example would be our 1% infrastructure fund. So that's a 1% sales tax. So the county gets a little over $4 million a year in that. Our portion of that is about 51% of the total tax. So the rest of that 1% gets distributed.
So you're saying they put that back into Fremont County?
Yes, in that case, all of it is.
50%.
Yeah. Well, no. So the infrastructure, which is a 1% tax that we have, you know, so all of that gets
Well,
paid.
for what we have, we got 5 pennies on the sale
Right,
now,
right,
but that 1 penny is for the roads.
right. And that's what I'm using as an example to give you
Okay.
dollar amounts. So we received just over $4 million of that. So out of that total pool, because that money also gets distributed to all of the municipalities around the county based off of population. So Fremont County has about 51% of that total population. So 51% of our population is in unincorporated areas of the county. And then the other 49% is divided among the various municipalities. So from that standpoint, you could say that it generates about $8 million total for every 1 penny of.
So $8 million. So if you take 4 pennies and you times it by 8, that's $32 million. We said Cheyenne, is that correct?
Yes,
But
we get back
We get back.
30%.
but we get back 5 million. Yeah.
I'll make that deal with anybody in this room.
Well, sales taxes.
I'll take the 70%, you take the 30.
Sales tax is a substantial revenue for the.
I know.
For
that's
the
what
state
we need
as well,
from our
so.
Legislators, you know, stop taking our pennies, we need them here.
Well, that leads into my next topic, the state direct distribution. So there was some legislation this year that has now taken some of that sales tax money and is using that to fund the direct distribution that comes to all of the municipalities and counties in the state. This is the one that uses the Madden formula, if you're familiar with that. So it's money that's based off of assessed values, population, sales tax revenue. And it's a really pretty complex formula. So anyway, by putting this in and now funding it annually through sales tax revenue at the state level, That's kind of made the future of this. It used to just be an appropriation, and so you just had to hope every biennium that they were feeling generous and willing to fund the direct distribution. So now looking forward to it, I think that I believe it was 8% of the state sales tax revenue is what they're putting into. So 8% of the 69% of the 4% is what's being used to fund this direct distribution. So in the current year, we budgeted and are anticipating $1,919,000. For next year, that'll go up slightly because of that percentage came out a little bit more in favor. We'll be at $2,070,000 for direct distribution. So that's looking positive and positive that it should not go away.
So,
Yes, sir.
just to be clear, the direct distribution is based on the Madden formula, but it is all sales tax coming back.
It's sales tax money at the state level that they're using to fund this.
Right.
Yes,
So that it's coming back out of the sales tax that they've received. So
yes, but it's in addition to the sales tax that we receive separately.
the 31%.
Yes,
So this is but it is sales tax.
it is sales
I
tax.
think that gets lost in that big definition of, well, it's based on assessed value and all this stuff. It's based on that, but that's just a formula. It is
Right.
sales tax that comes back to direct distribution to fund the counties.
Yes, it is.
Okay,
It is.
all right. Just want to make sure that was clear.
Yeah, it is just a distribution formula. And so it's meant to even out the waves. So,
And so that this year, that change that happened down at the legislature is that every 2 years, we have to go down there and beg for them to get that direct distribution. And now it's institutionalized by percentage to come back. So now they don't have to figure out, and the appropriations get squeamish about giving monies back to the counties. And we fought hard on that.
Yes.
They didn't do that out of the benefit of their great will up there. We worked really, really hard to get that in there, and it's important to us because it's not going to fluctuate that much.
right,
So, other than percentages going up. So if sales tax goes down, it goes down too.
right.
Right.
Correct.
Fair.
And I think that, however, history shows us that sales tax rarely goes down. So it might, so there's a chance that this will incrementally increase. Of course, if our assessed value suddenly skyrockets, that has an inverse effect on. So because of the distribution. But topics for another day.
How much more would you like to discuss?
I don't know. It'd be nice if it just stayed the same.
Yeah, I know.
All right, the next kind of key revenue that comes from the state is severance tax. So this is tax on our mineral producers for what they produce. This is in addition to the mineral ad valorem tax that the counties get to charge. But it's based off of the same production. So severance tax is also a very large revenue at the state level, and they have carved out portions of severance tax to then distribute back out to counties. A portion of it is just available for general governmental use, which is this severance tax that I talk about here. There's another layer of severance tax that we give that is dedicated to road construction funds. So I'll mention that a little bit later. So this number is fairly consistent year after year. We had budgeted 377,000 in severance tax for 26. It looks like we'll come in a little bit under that. I'm predicting $374,000. And then the severance tax estimate for fiscal year 27 is $372,000. Questions on severance tax? Or you need to vote?
Questions?
All right. gasoline and special fuels or diesel tax, that's another one of our, or another couple of our big revenues that come into the general fund. However, these are, reserved only for, road construction activities. And so from that standpoint, these activities or these, revenues are reported directly into the transportation department. So gasoline tax, these are, was it 24-cent taxes per gallon on gasoline and diesel that's sold. So those taxes are levied by the Department of Transportation at the state level, and then they turn around and share some of that revenue back to the counties. And so from a gasoline tax, we anticipated $766,000. For the current fiscal year, I'm projecting about $786,000 in revenue and gasoline tax. And for an estimate for next year budget, $774,000.
Mr. Chairman, name of the fund that you put those funds into is?
This doesn't go into, it goes into the general fund, but it goes into the transportation department.
And then you have to use it for road construction fund, correct?
Well, no, because there is another gasoline tax that goes
Oh.
into the road construction fund, similar to the other severance tax that goes into the road construction.
Okay,
fund.
so two different.
Two
revenue
different, yes,
streams. Okay.
two different
Okay.
severance taxes and two different gasoline taxes, only one special
Oh,
fuels
okay,
tax.
fair enough.
So the special fuels tax, which is primarily diesel, we had a budget of $1.2 million for this year. Our projection is $1,336,000. And our estimated budget for next year, $1,224,000. Then the last one I want to hit on is our veteran and Indian exemptions. So veteran exemption is by state statute. Veterans that meet the criteria can get up to $6,000 applied to either their property taxes or that can carry over and be used to offset some of their motor vehicle fees.
6,000 assessed.
6,000 assessed, yes. And that is applied through the assessor's office. I don't know what the deadline is for that.
The fourth Monday in May.
And so we grant those exemptions on the front end. So their taxes are reduced, potentially their motor vehicle fees are reduced. We do then get to apply whatever we exempted through that process to the state and get reimbursed. So we ultimately get made whole, hopefully, on those exemptions. The Indian exemption is similar. It is for
Sure. There's a difference though with the Indian exemption. Their enrolled member, they get it on every vehicle that they had. But on the veterans, they only have it on one vehicle.
Mhm.
Is that true or false? Meaning, if a veteran comes in, he can only apply to one vehicle. But with the Indian exemption, it's on every vehicle that they have, they get the exemption. Is that true or false?
So, Mr. Chairman, on a veteran's exemption, they get the $6,000, which equates to 90 tax dollars. So if they have a car that's plated, that costs $60 and one that's $30, they could use it on two vehicles. Because they can split that $90 up.
Mhm.
Now, the Indian exemption is, I'll let you do
Yeah.
that one.
So there's also a disabled veteran exemption.
That's
So
what I'm-
yes, if
That's the one, because
That's
because-
different than the veterans.
Because what I'm trying to point out is, if a veteran is 50% disabled, he only can do it on one vehicle.
Right.
But with the Indian exemption, they can do it on every single vehicle, which I don't understand.
correct.
A young woman, a young man, served the country, got 50%, you know what, how many wounds that is?
Mhm.
And then they only can put it on one vehicle? But then an Indian exemption, you can put it on every vehicle you own.
Mhm.
I don't understand that.
Mhm. And yeah, and you're absolutely right. And the disabled veteran, I mean, so that benefit varies depending on how nice of a vehicle you have. But you're correct. The disabled veterans are only allowed one exemption. for the Indian exemption, and I guess I will say, so the disabled veteran, it's a free license plate. On the Indian exemption, they do pay the state fee. They don't pay the county fee. So it's the county fee that gets exempted, but it does apply to every vehicle, everything that they own. As long as they meet the criteria of being enrolled in either the Eastern Shoshone or Northern Arapaho tribes, and they live on trust land. So if they live in town or if they live on deeded property, they don't qualify for this. So anyway, so the Indian exemption, same sort of thing. We grant this exemption on the front end. Once a year, we get the opportunity to compile all of what we exempted and apply to the state treasurer who reimburses us. Those exemptions are based off of appropriations. This year, for example, we were all of our veteran exemption that we requested back in May of 25, we received in September of 25. So we received all of our veteran exemption that we applied for, but did not get all of the Indian exemption money because they ran out of budget for that. So this last legislative session, there was an increase in appropriation for the state treasurer's office. So we've now gotten the second distribution. I think we were shorted like 13 cents or something like that from the whole thing. But anyway, the other thing that's going to impact us as we move forward, also during this legislative session, they made tribal government vehicles basically a government exempted license plate. So that means if it belongs to tribal transportation or their solid waste districts or DFS or anything like that, those vehicles are now exempted at the state level. So they will go to YDOT to get their license plate and they'll get the fancy little EX plates like the county vehicles have. And so therefore they don't come through our office any longer. That means we don't get any reimbursement on the exemption because they're exempt by definition now. So we will see a slight reduction in the Indian exemption, but it's also considerably less work on our part. We don't have to manage this stuff anymore. They'll go directly to YDOT to get their license plates. And so that just is for governmental vehicles, not just regular tribal members. So they will still go through us and pay their state fees and we'll get reimbursement on the exemption.
So the insurance company that go wild, why not?
Insurance?
Yeah.
No.
No.
I'm sure it's just like ours where,
Yeah.
we still have to have our
Yeah.
liability insurance and property insurance.
Mhm.
It's usually whoever carries the insurance.
Any questions on that? So those, like I say, those numbers for Indian exemption are gonna go down a little bit. The $6,000 in assessed value has increased over, what was it, 2,500 before?
It was 3,000.
3,000, okay. So anyway, we saw that this year, and so moving forward, we'll get slightly more veteran exemption reimbursement. So, right. I'm not gonna get into the details of the other ones. They're smaller, and if you have questions, please go ahead and contact me and we'll talk about them. So again, so attachment A is our big set of revenue projections. That's 4 pages. It's a lot of numbers. The blue column is what I'm anticipating for the current year, and the kind of greenish gray column is next year's anticipated budget. As we go through, certainly I'm picking out a lot of, this is all of the revenues that are in the general fund, including lots of individual departmental revenues. I leave it up to the department heads. They know better than I do what their actual revenues, what they anticipate. I mostly just look at trends, historical trends, projections, things like that. If something really jumps out at me, I'll make a note of it here, which actually reminds me, I didn't get it into the memo. Fine example of that is our WIC program. So the WIC program, rather than being a county-run program with state funding, is now being a state-run program. So all of that grant funding that we have received for the county employees that we're administering the WIC program is going away because now they're all state employees. So we don't have that revenue, but we also don't have those expenditures. So that's kind of a wash from that standpoint. And I understand there may potentially be some rental income that comes out of that instead, since they're still in our building. So anyway, any questions on that? I think I was going somewhere, but I don't remember what that was. So on the last page of attachment A, you look down at the bottom, you'll see our grand totals. So for the current fiscal year, this includes property taxes. We had budgeted $24,570,000. Our anticipated actuals for the general fund, $25,575,500. And our budget, again, including those estimated property taxes, $24,885,100. So budget wise, slightly better than last year, less than our actual revenues than we anticipate receiving. Again, those numbers will change because as we go through the budget process and nail down things and assess values, the property tax numbers will change slightly. And then one last thing is there's one additional page, looks like this. Though it's not for general fund, these are some of our really larger funds that I also do the revenue projections on. So we have our infrastructure fund, which is paid for by the 1% sales tax that goes into that. So you'll see what we expect for the current year as far as revenues, and then projections for next year and subsequent years, both from a sales tax revenue perspective and investment income going into that fund. We also have a road construction fund, also dedicated to the transportation department. This is where I talked about the second round of gas taxes and the second round of severance taxes. So those go into our road construction fund. This one is also used for road projects. The road construction fund is also where we buy our road material inventory. So that's where we buy our gravel, is through this fund, and then sell it to our 1% fund essentially when we use it. Again, investment income based off of the cash balance of that fund. I left the economic development fund on here. Of course, that sales tax ended over a year ago. So I don't anticipate any new money coming in. You can obviously see in this year, we had some money continue to trickle in off of delinquent payments and whatnot. So there have been small amounts of money coming in, nothing to hang our hat on. Also there's a balance in there that we did not spend from prior taxes. And so you'll see investment income there of that balance. I'm not knowing exactly what we want to do with that fund as we move forward. I believe there was 1.9, you seem to know that number, 1.6 million left in that fund. So that may continue to generate investment income into that fund or not, if we decide to do something with it. And then lastly, I added this, I believe last year, the dispatch fund, where I look at our E911 surtaxes and prepaid wireless amounts. And so you'll see our projection for the current year of about 370,000 combined prepaid wireless and surtax money that goes into there. And these are hard to predict. So we just have a slight escalation factor, expecting that probably there'll be more phone lines in upcoming years, but maybe not. So Again, take those estimates for what they're worth. That's it.
Thank you
Thank you.
Thank you.
for being so enlightening.
I tried.
Yeah,
Right.
Well, these will
Bloomer during
never
my
mind
presentation.
follow schematic through.
yeah.
There's no doom and gloom. Your presentation was fine.
Thanks, Jim. Thanks for. Right.
Yeah, last year we all needed the Kleenex box.
What was up? No,
Oh, okay. Within.
Sense of target practice.
Okay. All right. Thank you. Okay,
Mr. Chairman, we're gonna start with section 125. I totally forgot to make sure JP could get into the program early, so we just whipped it out today, and that's what I just gave you copies on, so we'll start with that since it's right at the top, so I'll let you explain it. Thank you.
The section 125 budget is a pass-through only, so it's amounts that are collected from the employees that go right into these accounts. And it can consist of the premiums that the employees pay pre-tax and the amounts that those people that want to participate in the flex share savings account, that's those amounts. It's down from last year because we're down employees.
Employees use it.
I'm sorry,
How many employees use it?
which one,
The flex pay.
the flex pay, currently we have about 12.
That's one.
Yeah, it's, that one is growing every year.
I'm sure you're getting a few young people.
Yeah.
Good.
Really possible, right? I mean, it does, then some fees that generally have been in my budget.
And
that
I
like to
moved
see.
those into them.
Okay,
Sorry.
she moved them in there into this budget because I never know what the numbers are and wasn't sure why it was coming out of mine, so. All we had on that one.
all right, any questions? Commissioners? All right,
Okay, thank you. We'll move into the county clerk's budget. There's just some extra copy here. And also this. There's some extra copies of just my contractual and service agreements and dues and subscriptions. So we can talk a little bit about some of that stuff. So the current budget that you have in front of you is we'll start with the good news. It's up $7,891 from last year. We had already moved over the elected official and deputies increases into here, which was about 1,000. And so realistically, my budget is down. Some of the areas that it's down is that, you allowed me to do online market, which was a way for people to access what is free right now from their land records perspective. And then they can go out and do a daily fee, a weekly fee, a monthly fee, or annual fee on that. And so all of that money will be finished up by the end of this year, or else I'll have to encumber it if we don't get it done. But that was the only part of that that didn't work out like I had expected, as I expected to have revenue of about $40,000 or $41,000 from that by now. But we're struggling to get everything up and running, so I'm hoping to make that much for next year. And as you'll see in my revenues, the last line that says other miscellaneous revenues, that is not showing that I'm making that 40,000 yet. So I'm hoping by the end of, like I said, this fiscal year, that that's a complete project, and that searching online will be something that you have to go pay for. Going through, let's go through my budget message, probably best. My fees were not as I envisioned due to the online payment process. The fees for services have increased, however. We have seen over the last couple of months, our lines at our counter have been much heavier than they have been. I don't know if it was from IRS payments to everybody, but maybe more vehicles were purchased or whatever. So we have increased in our fees there, and expect that part of it to probably at least be what we thought it was going to be, or a little bit more. Expenditure sides, as you know, most of the services that we use in our office are computer-based, and companies run those. And so there's always about a 3 to 5% increase. Cassell, which is our financial program, hardly ever increases us. So this time they increased a lot more. It looked more like a 13% when I actually figured out my numbers, and that's why I gave you the paperwork that you have here. If you look under what is that? The first one, the service agreements. I had put 21,000 last year, and I think I had overshot it for some reason. But this is what it's coming in this year is 22. So luckily my increase didn't look as bad as what they sent to me. The other ones that you can see on there is we have the ArcSearch online digitized records fee to put them out on the internet. You guys also have that same, not maybe that high a fee, but that's where we put your commissioner records and stuff too. The land, Tyler and title program combined is 75,000, and it was up like I think 5% this year. Wyoming archives do cost us, it's a really small amount to do that, but I'm at the phase where last year was 40, and I estimate about $100 this year. The Cassell financial program, again, finance on my side of things is 22,000. Jim is going to have some of the Tyler stuff and some of the Cassell stuff on his side. The Gravity budget manager and budget book creator is 35,251 this year. And then looking down to contractual services, we put in shredding of our personal information documents. And then the annual credit card fees for Tyler, I had to go to the Tyler credit cards because they would not accept any other company's credit cards. That's the piece I'm waiting for from our IT folks to get put together so we can do the online stuff, but that's going to be their annual fees. Moving into dues and subscriptions, we have our Clerks Association dues. Just so you know, on that, we are creating a training program for county clerks, and we're going to probably have some more costs to that. We have found some ways to get no cost training through the Clerks Association, but just so you know, that will help, especially on the election side of things. It'll be a big thing for clerks to get training through us, through our dues, and in addition to that. The data online valuing system I'm required by law to do the factory cost or MSRP for vehicles on all of our titles from out of state. And so we have to pay for that to get that. Newspapers, we cut out all of our statutory advertising. TFOA memberships, I share that with Jim. IGO is a recording, recording clerk, elections. It's a variety of things, and you get a lot of training there for little or no cost. PRIA is a recording membership that is very good also with getting a lot of low cost training. DocuSign, I'm going to continue that for $2,750. Let's see, the budget was reduced by one vacant person or position last year, and while this affects the amount of time we can get all of our duties done, we still feel that we're doing efficient work and effective service to our taxpayers without this position, so we're not asking for that back at this time. However, I wanted to let you know that in an election year, the floater employee that usually works up in the title department moves to elections, so we're out without her for the entire year, effectively putting us down 2 people. Those of you who know, I do work the counter when I can. Margie knows how to answer the questions for them as we can. And Emma over here, she's still doing work over here as she can. So we'll continue to think that we're gonna be able to do what we can do there. In addition, you did ask me to budget an HR position. I still don't believe it's necessary. I have a couple things to throw out to you that I did not put in my budget. One of them, and we hit on it perfectly today. It's a great day to tell you about this. I'd like to send you, I have paperwork here, but then I thought they have some demos and stuff in some emails that I have, so I'd like to send these to you. So the first one, on the SOCs is a company called TrueComp. And TrueComp, what they do is do kind of what Emma had set up, but they follow it all year long. And throughout their company, they do market analysis on where, just exactly what you were talking today. Where are we at? What's it looking like? Where's the gaps? Marketing updates, all kinds of stuff. Let's see. Anyway, if I sent this to you, you could go through their online demo and let me know if you're interested in something like that. I know Emma's done a great job, but you do have to keep it up. Getting a company like this, if we get this one by the end of June, if we commit to that by the end of June, we can get it for half price this year, which would be $14,000 to implement this. They update it twice a year. They do all the work, and all you do is, and we could send it out to all of our employees, and they could look at their, whoever they have or whatever job descriptions they need or whatever, and just do it that way. So that is one that I'm very interested in. You know me, I've always liked the time cards that are online, but I haven't been super happy with all the time cards online. The other one I'd like to send to you is the time and attendance proposal. Again, rather than pushing it off on us, they will do everything. So they will do the training of all of our employees. If they need something, they go directly to them. It does give us a lot of options. They even have, which I'm very interested in, I think Commissioner Thomas even asked that one time, it says something about a card reader. So if you're wanting your employees to swipe in and swipe out, I'm not sure this is it, but I don't know if there's something we could add to what we're already doing for that. There's just a number of things that they could do. So I'd like to send that on to you as well. If you'd like me to do any of these that kind of maybe loosen our load up a little bit, that would be great. I think the big thing that has been keeping me very busy in the HR world recently, and it wasn't always this way, is the harassment claims. And I think in some cases, people have learned the buzzwords of harassment, and I'm not sure it's always that way. I'm not going to downplay what they're experiencing, but I think getting me and a commissioner, and we did an independent person, which I still think is a great idea, all together at the same time to go somewhere is very difficult to do. And I think there are businesses out there that would do that for us too. Recently have worked with the sheriff's office with their detectives on some stuff. I'm not so sure that they couldn't actually go out and do those quick interviews as well for us. So I'd like to continue to try to work on that. Emma's got quite a thing going with some of the things that she's doing for us in HR. If you really disagree with me, then we'll talk about it again, but I hate to put in $100,000 position when we're trying to increase the wages for our other folks. And I think there's better ways we can do this, and I think training for our departments on the HR problems might be helpful too. So I've not put any of that in my budget.
Commissioner,
So, question and then comment. And then I have another comment. As an elected official, you take on HR, which probably is something that isn't officially in the overall, I guess, area of your elected official position? Or is it because then if you decide, or if you do not obtain that position, the next person may not want to be HR. So then if we have something in place, then it makes it easier for HR to continue with the county. And I think that's what we were looking at, in the sense of something that's in place that can continue, even though there's a change in your position.
Mr. Chair. Commissioner Thomas, so under the county clerk, all the personnel, all the benefits, everything do fall under
Okay.
our office. So, I'm super conservative and I don't want to spend money that I know I can handle. Having Margie do all the FMLA has been awesome. And yes, there might be a time when she's not here and we're prepared for that. I realize I'm getting to the end of my service, and if it's this year that I'm done, then it is, if I'm not elected. But I have been working very hard at succession plans for somebody else since I have been here for a while. Emma does have the ability, I think right now, if I decided I want an HR person, I could see her telling me, I don't want this job, I'd rather have that because it's going to be a way higher paying job. But I think she's very capable. I hate to do this in front of her here, but I'm like, she's very capable of doing a number of things that I've been learning about. And so I think, and I just told her, don't let me overload you at some point. But so I just think that we can handle this right now. And if I'm elected and we get down to the last, year or whatever, we can always transition at that time to see what would be best for the county at that time. I just don't feel like we need to spend a lot of money on something that we're already doing. And I will tell you, I've been here for the 2 HR people that we had, and I loved the people. They were great people. But it was, and no offense to our employees either, but it was a place for them to run to instead of going to their supervisors or their employer and work out the deal, the problems that they had. It wasn't a great thing, and it was causing the elected officials a lot of turmoil. At least through another elected official, they at least so far have worked very well with me, and most of them worked very well with Margie to say, good, I don't have to worry about that. You're gonna involve me, but you're not going to tell me how to do it or whatever. So I think the acceptance is pretty good. And there's a really fine friend that I had from Riverton that moved to another county. And she's a very nice person, and I'm sure she does an excellent job in HR, but I keep hearing reports like, we really hate our HR person, and that's terrible to hear, but we're okay right now with that, and I think I just like to keep going with that. But if you insist on doing that, then I'm an elected official, I could tell you no, but I don't want you to also just have your own person and then make it hard for me to work payroll and personnel issues of the things that I have to do too. So I'm willing to listen to what you guys want to do, and
Sure.
we'll see.
Yes. There is a software out there, if you want to look at it, it's called Paycom. It does have huge amount of HR responsibility in it, where there's a lot of it works really well for time management in the sense of salaried and non-salaried, exempt or non-exempt. And then it has a huge HR system where if there's disputes, or they call it performance memos, or they call it performance discussion, and there's a whole segment in it where it's all computerized, where the individuals would the the department head or the elected official would go in and be able to put that in, and it limits the issue of, as you say, it all would come back to you, rather than to a department. And in a sense, the department becomes the software. And the software, you're able to look through there. So examine that. It's called Paycom. Examine that. I think I think it's a great system for what you're talking about, and it limits the issue of a so-called HR department, but it brings the fact that you do have HR through that system. And then what you're talking about then works, because then if there is a change, everything moves through that particular software. And it has a lot to it. It's a pretty good software system for
And have you
HR.
look at- and I'll send these to you guys too, and have you look at anything, but anything you think we might be good for Fremont County would be much less than another employee, but
And then the way the individuals who have to, I guess, time card it, they do it on their phone. They just clock in on the phone and clock out on the phone, and it goes right into that system, and it keeps track of them.
okay. Sounds good.
Yeah.
Any other questions
Question.
on the budget?
You can just give our secretaries a staff a raise, that might do it too.
Okay,
Especially on a.
now we go to elections.
Lost the working one already. That didn't take long. I'll scratch that one. Okay. I'm gonna have, Mark, you probably talk about some of this as well, but. So it's an election year, obviously, and so our budgets go up on election year. I know we're supposed to stay at the same amount, but. That doesn't happen with this budget. Most of the money that we will get in for filing for office will be in this fiscal year's budget. I kept looking at next year's going, why don't we have any fees? But that's because we're here in May. So we won't have any of those next year. And our candidates and our political action committees prefer to get their campaign information electronically. So when they get their lists from us, when you go and ask us for a list, that's free if you'll take it yourself and do what you want with it, make your own labels or whatever. It does take time in the office. Then I think the only time we're gonna start charging is if they want us, after we send it to them, to spend hours and hours telling them how to use it if they don't understand the instructions, because that's where it takes time. If they want us to print them out or make labels, then we do charge them just what it costs us. And if they request maps, the candidates, we send them up to the assessor's office, the GIS staff. It's not easy to get maps of all of our districts in Fremont County in a very usable format. And so it's easier to send them to.
You can, Sherman, you can look at it on your phone. I've seen it.
Yes, it's just people try to look at like a certain area and then walk it.
Oh.
And so when you're trying to get all the streets in your district, you have to kind of cut it. You have to chunk it out. And Andy's pretty good with that stuff, so he could sometimes come up with something for the candidates. Most of our line items we always try to do in the off years, and so most of those we have done. But in this year, there are some items that have been increased. And we've identified $10,000 in overtime for staff. As you recall the other day, we're trying to make sure that they're interested as a county employee to work for us on election day. So we do pay them overtime instead of their department having to figure out flexing or paying them off themselves or giving them comp time. We've also increased the contract line item, and we need to pay the election judges and do again to the new legislation on audits. We will have to do more time with election judges for that. Margie did include the telephone costs in hers. I do not have it in mine. I basically told everybody else since nobody seemed to know what the telephone costs were for sure. Hers, we're pretty sure that's what hers is going to be, and I don't have mine in, so we'll have to do those. Printed office supplies have been increased as we're anticipating a 17-inch ballot on both sides. Due to the number of candidates and primary and general will have questions on them. The total of registered voters and the number to order is also based on the 2024 presidential election. I think that's just for the interest that's been shown for this upcoming election. That's why they went that way. The travel that we put into our budget is due to the County Clerks Association continuing education on election uniformity, fall meetings, Waco, Wild Ridge training, and updates to the e-pollbook training. We did receive money from the state for election training, and we're using that up as much as we can, but otherwise we have used our own money here. Increase in the cost that you will see is contract labor, statutory publication costs, printed off supplies, postage, travel, and salaries overtime. Do you want to add anything, Margie? Yeah. So if you see anything that you have questions on in particular, we also gave you her contractual services, just kind of so you can see the breakdown of what we do there. The ballots on the website, you remember we used to send out like the sample ballots to everybody in a flyer, and we could do it much cheaper by putting it on the website. And so if you go in the GIS and you hit your address, then you can go over to the right side. I think it's under layers. You can see is it under layer. We don't know because as a new company, but that's where it used to
I think
be.
it's gonna be much simpler with the new company to be able to click on your address and get your ballots.
But that's where you can see that.
So,
Yes.
2016, when I first, decided to run for county commissioner, election time was how do I put it, anyway, mild, fun, kind of, we're vote. 2026, it's dangerous. So is there any money in here for security?
So we're super important. Have your next person up here in a minute.
Okay.
Emergency management has done all of our, what did you call them? Sorry. What's your plan, things that you have for us?
We do the visits.
Yep, they do all the pre-visits of our locations, make sure we have generators and all that stuff. As far as protecting our judges and whatnot, I do work with law enforcement in all of our areas and ask them to go vote in your uniform. Please stop by, drive around, and they have done that. I've been very pleased with, at least the sheriff's office has worked very well with us, and we'll continue to work with our other folks. We do training for our election judges, and we have added active shooter, not in great detail, but we do tell them exactly what to do, and they all have a book at the back of their book that says all the different things, this bomb threats and all these things. And we've done a lot of online and tabletop work with the Homeland Security on just what ifs, and actually have some cards that were given to us by the EAC that you can pull out and says, what if you have this happen? And we can work on that. And we're also going to work with our judges on some of those.
Yes, Chairman, it just seems that everybody these days are on edge and easily tempered. But, it's too late. So in that, just making sure that everybody's safe in the election sites. And I wouldn't even talk like this 10 years ago.
We've also have a new company called Integra that we're doing our election judge enrollment. It also is doing a tracking of our equipment. So we know at all times where that equipment's at, and we still put our cameras on the equipment when nobody's there. And we have our chain of custody, which we could take very seriously. And as Julie said, we do have our emergency plan, which Mylan has reviewed for us again this year. And you will see that we've signed off on it and read it, everyone in elections, and that is on the website. The plan is not, but that we have read it is. Cybersecurity, the Secretary of State's office has also done some cybersecurity classes for us. And Julie and I have taken absolutely every cybersecurity and tried to include our staff whenever possible, so they're getting the training at the same time.
You have a good point, though, that there's a lot of our processes, testing, the audit and all of that, which has to be open, which it always has been, but it's more known now that the public can be there as to whatever your office can hold. So our new building is just the right size for what we do, but doesn't hold a lot of people. So we may have to consider live streaming over here in the commissioner's room, because I may not be able to hold more than 6 or 8 of us in that room over there, so that makes it kind of difficult, but the public is encouraged to show up to those things throughout the legislative session, so you are right, and I've anticipated that I may have to have someone there that just kind of watches while we're working, because we're not paying attention to our surroundings probably as well as we should, so I'm considering seeing if somebody will volunteer that, or if I have to pay them to come and just make sure everything's good on that end too, so people do that. A couple things I forgot about, the clerks thing that go for all of us is all of our bonds are up this year, and that goes to that $100,000 range. And so I just barely got that, so I know Aaron and I don't have the right numbers in our budget, we'll have to put that in. But the rest of you all should, on your budgets, I've gotten that out to the elected officials, so I want to let you know that. Also, our bank is changing, and this time they're gonna make us change everything.
Oh, geez.
Direct deposit information, all of our warrants, all of our checks, all of that stuff, so I do not know the cost of that. I did put some money in, but I don't know that it will be that, so I just want to make sure you are all aware of that.
Okay, Chairman.
Yeah.
How many positions are you needing, are you vacant?
For,
Four now?
I mean, for what, for us,
So how many positions are vacant from your area vacancies?
just the one that we gave up last year, and I just, my election one goes
And
downstairs.
then the election one that works part-time in election,
Okay.
she'll be down there full-time for the year.
Yeah, okay.
So we're down 2 over in the main office right
Yeah.
now, but they're a good crew over there.
It,
Thank you so much.
thank you. Mike, come on up. If you're ready. Unless you want to-
I've come through the door for an hour early and you said, "Oh, we're ready for you."
Yeah.
So I
Yeah.
want to make sure.
Unfortunately, it didn't work that way this year.
And that's okay. Chairman, Commissioner, we were asked to, keep our budgets primarily the same as last year, and I pretty much did that in all categories, but, 2, and then we have the progressive, pay schedule for the assistant coordinator, which was approved back in January 13th. I came here on the 6th. You had me build a matrix of step levels. And then on the 13th, I came back and you approved those. And so I'll just kind of run down some of the things. The first thing in the budget is, as Jim had mentioned, we've got notification that our emergency management program grant, performance grant, from 2025 should be arriving for the grant award for signatures and review with the county attorney, and that's 59,979. Why they just didn't make 6,000, I don't know, but that is what we'll be getting, and as soon as we get that, we'll quickly be able to go back and apply that to previous salaries and benefits. So we'll wipe that out and nothing flat. But the reducing trend that we're seeing is in 2023, that grant that we were awarded was $90,806. And then in 2024, that same grant was awarded $82,725. And then the 2025, which we're waiting on, is $59,979. So you can see that from 2023 to 2025, it's like a 34% drop. And we're not sure what the trajectories of those are gonna, if they're gonna go up, they're gonna go down. We don't really see anything going up these days. But we'll take that 60,000.
Yeah.
Be glad we got it. So the next thing is the SOC step, on the new employee. They are currently at 45,000, and if when they hit the matrix marks, skill sets and achievements, then I will come to this body and they would advance to the intermediate level, which would put them in the 15 percentile, and that would be an increase of $2,500. So when they meet that mark, I will come to you and then let you know that, I'd like to advance to that next step and then bring the signature change of salary request at that time. And then the next level would be the advanced level, which has a whole bunch of skill sets to achieve. But the current emergency management assistant is pretty sharp if you cut through a lot of that skill sets pretty quick. So good for her because it really does make a difference in an employee's life to see those pay increases, especially in today's day and age. And it's good for employee retention too. We see a lot of loss in all of our government on employee retention. And so the next thing that I had requested, just in a couple line items, would be a technology request in our budget, which would affect the dues and subscription line item by $1,000, and what was the operational supplies. And so the dues and the subscriptions, what I'd like to do, as I mentioned in the budget statement, is get a subscription to Starlink. Starlink is, it's the cutting edge, and it's getting a little bit less expensive to operate. So I'd like to get a subscription of that, which would be $1,000 a year. I left a little room for usage on that, because if you go over a certain amount of your usage, then they start charging you more, and we never know what we're going to have. It's a long-term event, and we'll use up that data. So I've asked for $1,000 for the Starlink subscription, and then in operational supplies, I've asked for another $1,000, increasing that from $1,800 to $2,800 for the mini Starlink dish kit, some extension cables. If I'm in an area where there's lots of trees, I'd have to take that dish out to an area that can see clear sky, no trees in the way.
You'll be surprised.
Yeah.
I have it at my cabin and I'm surrounded by trees.
Okay, and it's cutting through it.
Yeah.
Great. And then the some mobile power packs and some AC adapter converters that I'd like to get with this kit. And that, like I said, it increased that budget by $1,000. So total increase is $2,000 for the technology, potentially a $5,437 increase in wages through that 2027. It wasn't reflected in the budget. I had consulted with Julie, and she said that when that time comes, then they can look at what's left in the budget towards the end and then add to it if we didn't use our budget up. But he would adjust it later if there was a need for that. And then, of course, there's some little offsets there with retirement expenses and some Social Security that would also take place in that. But for the most part, it's not a drastic change from last year.
Question.
I do have a sheet on the SOCs. When I submitted the gravity budget on Thursday, I got that new SOC calculations Friday, the day after I hit the submit button. So on the entry level, intermediate level, and advanced level for the assistant coordinator, they have changed mildly, and those are just the percentiles in green that being changed to. So with the advanced level compensation, that would put her actually in the 25 percentile, which is a good thing. That's making progression in, especially in retention. So I just wanted to make that clear that there was some mild changes in those percentiles, right? Giving you that supplemental document.
All right, thank you. Any questions? Now you're coming back to us with the court security.
Yeah, I believe in June,
Okay.
the building security budget. All right, that should be a pretty simple one. It's one line item, so.
Right. Okay. Thank you,
For
Mike.
your time.
Steve,
Commissioners. Lovely afternoon, huh?
Yes.
Oh, that's what they say. We've been stuck in here all.
That's perfect. then, all right.
Which puts us in a great mood.
Yes.
Yeah.
As opposed to.
very good.
So, our department, budget is not significantly different than last year's budget. There are a couple of, issues or, additions and subtractions. We reduced our projected revenue, from this year's budget by, $4,400, mostly because, it seems as though the economy is changing, at least to a certain extent, with regards to people's ability to afford new construction. And so trying to take into account for some of that reduction in disposable income, we reduced our addressing or small wastewater and addressing. Left a number of subdivisions because subdivisions generally stay the same or perk up a little bit during times of economic distress, but the others necessarily don't. And then as far as expenditures go, Marcel hasn't been to get a refresher on his NOT certification, and they're holding a kind of a mini conference this year in Denver. So we're asking to send him to Denver for 3 days for continuing credits for his licensing, and then also it's has courses that he takes during those 3 days. And in additional to that, they have displays and exhibits from contractors on construction materials and types of small wastewater systems and new systems that are on the market, which are always good to see and provide some level of interest between him and the remainder of the regulated group within the state. We dropped one of our ESRI licenses this year, and there was a change in costs associated with those ESRI licenses, so we have a drop of $2,300 for that. And we have been doing a really good job of scheduling travel with planning commission members, so we try not to have them all traveling around individually, going to new or subdivisions. We try and do that on the day they come here rather than doing it on a different day. So we've saved ourselves quite a little bit of money on travel expenses. So that's reflected in this year's budget too, which is about $3,000 less than what we budgeted last year. So all in all, we're showing $4,400 less in revenue and $5,000 or so less in expenses. So pretty well balances. It does not include anything related to telephones. Did not exactly know what the telephone charge is or how that was working. We didn't, and we don't have any new phones, so I wasn't on the list for that. Otherwise, that's our department.
That, as they say, is that. So you didn't highlight on part of your budget message, the last. I don't know, the last paragraph. But you expect to retire.
Oh, there is that in that.
Oh, that.
Yeah, so it's not a hard and fast thing, but I really want to just throw it out there so that we don't get caught out. That certainly would be my wife turned 65 in January. I'm here for a certain number of years in February, so March is a good time because those hurdles are out of the way, so she can apply for Medicare, which is, of course, the reason all of us really work is to make sure that we're taken care of when we get sick. Yeah. So I think certainly there's time to formulate a plan on how to transition to that, and I'm not going anywhere, so I'm here for provide assistance.
Thank you. Any other questions?
Mr. Chairman, the only question comes up is, Steve, there's just not some sort of cookie cutter out there that has another Steve Bauman sitting out there in the plains, and I think it would be prudent to put some sort of an estimate that we would find somebody 3 months early, that we would try to budget for some sort of transition. And I know that things can change, but I'd rather just throw some budgetary language or finances in there to say, hey, let's think about, because it's a significant transition in my mind.
So I left my salary in it through the end of it, so there would have to be something to account for a little bit of overlap.
Right.
Well, we might have to add, kind of like Commissioner Jones said, I'm thinking maybe add 3 months worth of salary for a training replacement.
This was also retirement payout too.
Right.
Gotta think of too, Steve.
I did that. Yeah, put that in.
Okay. So think about that and then maybe throw something back at us. So-
Okay, I can do that. Yep.
Yeah.
Okay. And I didn't do the fuel budget yet. It's generally just a pass through, so there's nothing terribly different in there. I do think there's probably reason to think about whether or not we want to change and remove temporarily our 10 cents that we had to everybody's fuel cost that's used to appropriate more equipment in case we need to, or to repair the equipment that we have. You know, we've most of our stuff now is reasonably new, so we don't have any big issues coming up, except perhaps at life site where we may have to replace the tanks. But other than that, I think we're probably in pretty good shape. We have a reasonably sized sinking fund that those dollars have gone into, so we've got set aside there that can handle all of those things. So there may be some reason to do that for some period of time, just to kind of give everybody else's budget a break. So I think it's something to contemplate. Whether or not we want to do that or not, I think is at your discretion, but probably a reasonable thing to do for some period of time while the prices are elevated like they are.
Okay. Thank you very much.
Yep.
Thank you, Steve. Is it me?
No. You have to wait until 4.
Just wait until before. Just trying to be responsible as an adult, just in case you were running early.
Well, you could be like Mylan, he showed up an hour early and he said.
They're waiting for an hour. No, that's okay. It was only 20 minutes and it wasn't that bad of a wait. So I hope you were able to get my completed budget message and packet. Are you guys seeing what I'm seeing? Okay,
We
Yeah, we had been out as well.
okay.
Okay.
So our anticipated revenue was left the same. We anticipate about $107,000 this year, 103 last year. I'm keeping it right at the 100,000 mark because 2 years prior, we were at much less than that. 55,000. So our goal is the 100,000, but that's really based on the nature of the work and who needs that service. So hard to anticipate for, but I am going to leave it at the same amount of revenue from last year.
our changes from last year. The salary for Dr. Frost isn't a true salary, of course, it's only used when he works. And I have added 10,000 to that to make it 130,000 because of this year and us being so busy with autopsies. My budget is about $18,000 over. I've spoken with Julie about that and moving some of those monies around to make sure that this year's budget is balanced. And that is for payments of Dr. Frost. So anyways, it's not a true salary, it just gets paid when he works. The salary for Kirsten Kenny, it was approved by the commission in October to move her to the 52,000 per year. And that increase is reflected in this budget. The coroner salary was raised, which also raises the chief deputy salary, and that is also reflected for a half year in this budget. The line items for infection control and operating supplies are increased due to the rise of cost of petroleum-based products, gloves, gowns, and body bags, and estimates given by our regular suppliers. So we ordered 200 body bags per year. Last year they were $37 a bag. We're looking at $66 a bag.
What about gloves?
Same.
Yeah.
It's the same. It's going to double.
Everything.
Anything petroleum-based, which is our gloves, our gowns, and our body bags. And so I've added $5,000 to our operating supplies to cover that increase, and we're only going to order 150 bags to try and offset that. And it really just depends on the supplier. We've been working with 2 different suppliers, one of which is going to possibly do the shipping for free if we order 200. And then we're trying to find out what that shipping will be if we only order 150. Do we get more bags if we order the 200 and not get do the shipping fee, or are we paying less? So just based on what those costs will be in July. That's going to be interesting. So both of those, and the gloves are in the infection control, so are the gowns. Those come under the infection control line item, and I did bump that up just a little bit to, from 3,500 to 4,000. So I added $500 for that increase in the cost of gloves and gowns. The body bags is the big one, and that's because there's so much. They're $60 per bag. And
How long does it take for like gloves to dry rot?
it depends on where they're kept. If they're kept in a controlled environment where it's 75 degrees year round, we can keep them for about 5 years. If they're in,
Like I'm talking about, I was just thinking about Mylan's emergency response trailers.
those should be circulated out. So in our emergency response trailer, we circulate those gloves out every 2 years. So those go back in, the ones that have been sitting in the vehicle for 2 years, they come out, they get used. So that way they're not brittle, they don't fall apart. You don't go to put them on and the cuff rips off. We circulate those out and through. Because we don't have a temperature controlled environment to keep those in. Those are constantly on circulation. So, but if they're heated, cooled, they just stay outside with the weather, you're gonna get just a couple of years out of them. Same with body bags, since they're petroleum based, they don't last forever either. The handles start ripping off, the bottoms start ripping out, and that's kind of the last thing we want when we're on scene. So we rotate those out as well. So if we have any left over from last year, we'll move those up to be used first of the year. So my operations line item has increased by 1,500. So 4 years ago, the Department of Justice said the coroner's office needs access to IAPIS, which is the automated fingerprint identification system for identification of decedents who are otherwise unknown. And they allowed us access through the state to submit our fingerprints. When we get the fingerprints back, it's just demographic information. It is not their arrest history, which we shouldn't have anyways. We are not entitled to that. So they said, yes, we can go ahead and have access to it, and provided a program called Galton. And they have recently defunded Galton, and it is being phased out. It will be done by the end of this year. So they said, you still have access, but you have to build your own program. Great. So we've got in contact with the FBI, talked to the company that they're using, which is Parsons. And Parsons has given us a quote. for the development of an application or software for $5,000 for our county. I have reached out to the Central Wyoming Healthcare Coalition and believe that they will cover the initial $5,000 startup cost. It would be $1,500 for us to implement that and have training. So the $1,500 added to that operation line item is for the access to the app that's going to be created. They say that it is reportedly a one-time purchase. And I've underlined it reportedly. And it can be downloaded for use with the software, with the fingerprint equipment that we already have. So they have first asked us to use the live scan. That doesn't work on decedents. Live scan means live people. It means there's a heartbeat and there's a pulse and they can read that and it takes the prints. So we had to get different equipment called a Kojak machine that will read prints that don't have a pulse or electrical activity running through them. So we purchased through a grant the Kojak machine and through the Central Wyoming Healthcare Coalition, and have been using that with the Galton system. So this new system will integrate with the fingerprint equipment that we have. So we have a station dedicated specifically just for fingerprints. It has to be offline. It can only submit and receive. It can't transmit data elsewhere. So that way decedent IDs aren't accidentally put on the internet. So, well, and getting somebody to roll their finger for me is a little difficult. So what they're called is we do slaps, where you put the hand down and then you just pick it straight up. So, because we can't do rolls oftentimes the hands are rigged in a way that we can't do rolls, or they're missing or they're dehydrated. So we have to rehydrate and then try and do slaps instead of rolls. So, yeah, I know there's a lot to it. So anyways, we've asked for this company to put together the Aries system for us on a small scale. And the cost was $5,000. I have approached the Central Wyoming Healthcare Coalition for that initial setup cost with the $1,500 that is reportedly a one-time purchase. And when they gave us access, there were only 3 counties in the state that took advantage of the free access. It was us, Natrona County, and Laramie County. And so we will be the ones. Laramie County can use their DCI equipment that's there, but we don't have access to that yet. So once that app is made, then it can be sold to other counties in the state so that way they can have the same information. But we're the pilot and we're trying to figure out all the bugs. And they have given us a break on our purchase price because we are the pilot county. I think they'll be charging other counties around $2,000 for the initial setup. So our fuel usage increased due to the anticipated market price and cost per gallon for the planning department. I do want to note that my dispatch fees have gone up $2,000 this year. Even though my call out has not changed a whole lot. We had 169 call outs last year compared to the year before where we had 158. So it wasn't a huge change, but it was a $2,000 difference per the dispatch committee. So $2,000 was in addition. Our dues and subscriptions was increased by $2,000. The database system currently used is not compatible with data sharing, integration of new technology, and is the same data system that's been used since at least 2001 when I started with the coroner's office. It's an Excel spreadsheet, and that's it. So we need to integrate something that, because this has no upgrades and minimal backup availability. We've been doing offsite backups, taking in a terabyte drive, backing up our entire system to it, and then taking it offsite. It's not the most effective or user-friendly. Because we have 8,000 files, which include photographs in all of those files. It's a lot and it's overwhelming. And what we found this year, I had reached out to Lance, and our computer system, because it can only hold so much, is starting to overwrite data. I was looking for a homicide case that's going to trial and found that my photos from that case had been overwritten and not backed up anywhere. And so we were scrambling to try and find an old backup that maybe had them on, and thankfully we were able to do so. But we need a system that's a little bit more robust than that. So we plan to move to a data system called MDI log, which is specifically for medical legal death investigators. It's tried and true. It's being used in Nevada, in New York, in smaller communities in Ada, Idaho, and Laramie County uses MDI log as well. It integrates toxicology results, fingerprint tank cards, data collection and sharing to our necessary partners, report writing, medication logs, property and evidence collection documentation, chain of custody and evidence, and provides for future upgrades and redundant and robust storage and backup data availability. The cost of the service is based on the population served. So they take the 40,000 of Fremont County and they decide what it is that we need and how it's tailored to our usage. And it will be a reoccurring yearly expense of approximately $1,500 a year after the initial setup cost. So $500 went to the initial setup and training, and then $1,500 per year after that for the use of that data equipment. There's got to be some way for us to store our 8,000 files, 8,000 individual person files, and all the photographs. And back when I started, when they were all on 35mm film, all those photos are in the actual file. They've been scanned and in the file, but those scans are now on the computer.
So do you hard copy those at all, put them into a file?
Yes.
Store 'em?
Yes. So everything's backed up at least once on a hard copy on a paper document, and then backed up onto a terabyte drive that is removed and put into a fire safe.
So how far back does that go?
1886.
I was gonna say, like,
1886.
wow.
And so we've been working with the archives to archive some of this information, but they want us to scan it ourselves and then send it to them. Our current process would be to scan it into our scanner and then it would go to our computer, but my computer doesn't have the storage. So if we can get all of these cases onto a log that goes to the cloud, we'd open up a ton more storage where I can start backing those things up and sending them over to the archives.
Yes. Do you identify that for whatever traveling computers
I have not.
as an ongoing thing? Because, yeah, I want that.
So I unfortunately missed yesterday's
Okay.
department heads meeting.
Could you write that up and make sure that's on their list?
For sure.
That's Something
that
they
form.
need to address.
We'll get a form to her today, and then there's an online form too. If we can get her the handwritten one, just
Yeah,
remind her and then make
Yeah,
sure she's got the
just
online
let's get
form.
it on this list, so.
So what it sounds like to me is once I pay for the program, it downloads to our computer. We do a download from their site. And then it is up and usable, and they allow us, so the $2,000 startup fee includes 500 in user training and in troubleshooting. And I'm happy to send that through TCI so they can.
Yeah, Mr. Chairman, I just think it needs to go into an automatic backup through your system every time. That, it should be
It should be
captured
okay.
to some secure site.
Yeah.
So in talking with, with TCI and with Lance, that has not been done since October of last year. Kevin used to do what's called a walk-off,
Okay.
where he'd come in with a hard drive, back up our computer system, and then walk off to a secure site. Since that has not been done, I have been doing that with a terabyte drive that I own and have been taking it offsite to a fire
Why
safe.
can't we get this set up? If your computer is online, we have servers that are secure.
We actually have a Buffalo server here that's dedicated for my office.
Is it
But
because it's offline?
Yes, but has not been taken out of the closet or used since.
So that's getting updated, but we just need to make sure we don't lose sight of that as we upgrade that equipment.
Right, so I have a Buffalo server in my office and it's supposed to be talking to the one here, doing a nightly or weekly backup.
Okay,
When we tried to find it off that, it was unretrievable because it hadn't been done.
okay. Yeah.
I think
Get it on the list.
get a hold of.
Yes,
And get that form filled out and get that.
Get that done and continue on, and maybe you'll have two backups. Better be safe, sorry.
I would rather be safe than sorry, especially since some of these cases don't go to trial for years.
Yeah.
Or new evidence is found 40 years later.
Mhm.
And now I'm looking for the photos from 40 years ago to see what we can take to court with us. One thing I did not add to this budget was, Julie let me know kind of later in the day yesterday what the insurance bonds were going to look like, and that's $325 for this office. And so I did not add that onto this. I had submitted it prior to knowing what that 300, what the cost was.
So we had to increase the bond.
Right, so add $300 to that insurance bonds, 325, I'm sorry. And that would be the total.
Anything else?
Let's see, Chairman, questions, concerns?
How did does your computer with your x-ray machine, how do you transfer those together?
So the X-ray machine has a dedicated computer to it as well. So that way it's all, it's not online. It sees the plate that we use and it puts it right up on the computer where we can see it. And then in order to get those X-rays to our main computer, we have to put them on a stick, like a flash drive, and copy them onto the stick. And then we delete them off that computer because it just takes up too much space. X-rays are huge.
Okay.
And so once we've done the X-rays, they're moved onto a flash drive or to a data stick. That gets moved over to the coroner's office in Riverton and put on the computer there.
Okay.
There is no way to print those out. Because the biggest issue is in printing them, they become very fuzzy. And you can no longer see some of the detail like tool marks or knife wounds, things like that in bone that we would be looking for, or very small fractures, very small breaks. It just becomes very fuzzy, very pixelated on trying to print those. So they do have to stay in their original form and are backed up to our computer. And then backed up again to the terabyte drive that I take offsite.
Thank you.
You're welcome.
Well, thank you for coming in. Thank you for being early.
Yeah, absolutely.
Okay.
You guys drive home safely, please. It's
All right.
beautiful day out there.
Yeah. Thank you. Thank you. Anything else?
Just want to remind Erin, but you guys too, that I keep track of things. So she also asked for a striker replacement in July of 5,700, and we again told her at the end of the year, if she was short, we would do that. And then also that she adjusted Kirsten's SOC by 3,700. So those are things we had already approved, so I'll work with her and make sure she gets the money that needs to make that whole, but I just want to remind you guys. of
And
that.
she reminded us that the bonding would be an additional.
We'll have to, I wrote that on hers and mine.
Yeah.
Because we just found those out today, so.
Thank you, Julie. I
Yes,
appreciate that. Yes, we
absolutely.
did buy the striker soft with the 5,700, which has been in use since we purchased it, but it was. Were we gonna be able to cover it with our own budget, this budget? And yeah.
Yeah. And the phones that you have in there are the new phones.
They are the new
Okay,
phones.
all right.
Yes, and so I did add money to, I'm sorry. I'm not yelling. I did add what Lance had indicated was going to be the cost for our phone lines. And he told me to do $30 per line. So there's $960 added to my budget for telephone service.
All right, thank you. Commissioners, anything else? I do wanna tell everyone and remind everyone, if you didn't hear. We had closed the diversion dam bridge,
So that.
so it is now closed. It is unsafe for traffic. So, Transportation Department notified school districts, notified the parents, notified the bus drivers. Set up roadblocks and put it on county Candy. He made all the notifications and, so it is, Version Dam is now closed. So. Anything else?
Mr. Chairman, Jim, these documents, the revenue projections. And I'm wondering this out loud, whether we can get these into those drives so that we have those available too, so we can go one place. So whatever you and Tara gave us those and make sure they're dated with great big dates. So if that gets updated, we know what it is. So I just want to have it all in one spot on those shared drives. That would be really helpful.
Do you want PDF or do you want?
PDF's fine. I don't need to add it. I just wanted, if I wanted to go back and look at the revenue projections. I just know that's a valuable document and my own filing system is pretty inept, so having it there. It's like, hey, here's important revenue documents or whatever. We have an extra folder or something within those shared docs. That's gonna be really helpful.
I did email that to all of the commissioners, and Julie and Emma, Sarah. So you have them and I have them, she can put them wherever you like them.
I want them on a shared drive.
So they'll be,
That is a charge.
We're gonna make the transition this year by gum.
By gum, by bell.
By gum.
Mr.
Okay,
Chairman,
thank you.
just since this is your first one, so I see that the only thing that you, not the only, but one of the things you don't see is how much they have paid or expect to pay or to use out of their budget for next year. If you want me to, I can go look at how they're doing and outline some that I think that look funny or like they haven't spent any and it's $20,000. I mean, you don't see that. That's the only thing bad about a budget book type
Would be.
look is. But I could go back and look for you and just give you a snippet or whatever if I think you want to see it or,
And yeah, I would like to.
okay.
And we can't get comment, right?
Right, and I asked them to put that in their budget messages, and then we're going to take all that we hear here through the AI part of it. I'll double check all of that. I usually do the minutes for those, and so I'll double check that they are accurate, and so you'll have those. That we can also, I'll keep them separate. They'll be in your regular, minute stuff, but then I'll take them separate, and we'll keep track of them through your shared file too, so you can always go back to them.
Okay.
But I could do that too, is kind of look at their comments and see if there's anything I need to upload for you, so.
Those revenue projections are there now, so if you just refresh your screen, it'll be there.
Should have put it in people way.
I don't need it right this second. I just want to know that where it is when I go look. Thank you. Appreciate it.
Okay, anything further? Recap.
Oh, you've got scholarships.
Scholarship, did you get your scholarships done? I think yours was the only one I worked on, so
Oh.
next week,
I was late,
that's okay. Scholarship,
you know.
next week.
I understand what
No, you gotta make it different.
Wasn't that?
There's a violin.
Yeah, I apologize, irresponsible on my part.
I'll watch for that for next week, then, other than that, I did.
Next week, we'll also put on the procurement policy. I'll get with Nathan and find out what things he has to add to that.
When are we gonna work on the other policies?
So I was gonna start giving those to you every week. It sounded like you wanted to talk about vehicle policy first, so I can give that to Emma. I can throw that out to you all to review, and then we'll talk about it on next Tuesday as well.
And I've gotten a few comments about, they've seen, well, dogs in county buildings,
I've seen them.
county vehicles, other than
The canines.
canine rifles. Yeah,
I've seen them.
so, I think we need to talk about that. real quick.
I know one thing I have to driving too, I know we talked about, there's a place in there about the cleanliness of, and there's no smoking, and I guess penalties for it. That would be one thing. One thing I wanted to add, so think about this, but accidents that we've had with folks in the vehicles, and we never really know the story. I mean, I know we get maybe their written comments, but I think if they're at fault, or even if they've maybe it wasn't their fault, but they're like continually in accidents. I don't know. We want to make sure that there's something in their file that says here, I've had accidents. I don't know. It could be something down the road if somebody is like, man, we just continue to have these problems with vehicles. I don't know. Think about that. That was one of my notes from, I think some other elected official asked me that question. I'm like, I don't know. We could talk about how we, just even if you have a report that goes, an annual report that says this is how many accidents they had. Think about it. That's something you want to do. We were, yeah,
It's really super long, so we're still trying to find something better than they have, so. We could add the defensive driving in there, but I just, if it's not like 15 minutes or less, I can't get people to do it. I don't know. Yeah, so.
And then what do you want us to do with these? Leave them here to put in a notebook? Okay, commissioners. Move to adjourn.
Second.
All those in favor?
Aye.
We are adjourned.
Oh.
Thank you all.